Welcome to Stock Investment Analysis. In this video, I'm going to reveal my dividend growth portfolio. I'm going to show you what I own, how much, the dividends I'm receiving, the dividend growth, and the 5 stocks I bought in June, so make sure you watch the end to see that. I'm also announcing another contest to give away a $99 subscription to DivTracker for free. If you want to enter, make sure you include the word DivTracker in a comment on this video. I'll choose one person who posted a comment with the word DivTracker in it at random, and I will announce the winner in the next video. Just so you know, DivTracker is only on the Apple Store, so please only enter the contest if you or someone you know has an Apple device like an iPhone or an iPad that will use the app. Please hit the like button because these videos take me a great deal of work to put together and I would love to get it out to more people who are interested. Subscribe and hit the bell so you never miss a future video, and let's get started. I want to start with showing you a dividend goal I finally met this month. My investing goals are primarily centered around dividends. If you watched my last portfolio video, you know I have a list of the median household income of countries. I like to see which countries I have enough income in dividends alone to retire to right now. It's a cool way of setting short-term goals for myself. In the last video, I mentioned I was earning $882 in dividends per month on average, which was just over Croatia and Uruguay. That means I have the ability to retire on dividends alone in either country in addition to others like Costa Rica, Panama, Brazil, Turkey, China, or Mexico. I was very close to being able to retire in Poland, my next goal. However, as of the month of June, I am now making almost $908 in dividends per month, and I can add Poland to my list. My next goal is to get to $915 in dividends per month so I can add Estonia to my list. This roadmap shows all the countries in red I am currently able to retire in using only my dividend income based on their household median income. Looking at this chart here, you can see how my dividend growth portfolio's annual dividends have grown. If you look at the beginning, which is February of 2018, you can see based on my investments at that time, I was only earning $17 in dividends per year. By the end of 2018, I was earning $2,744 in dividends per year. By the end of 2019, I was earning about $6,700 per year. Now, only half a year later, I am fast approaching $11,000. You can see a huge jump in my dividend income in March because I took advantage of that huge drop in share prices when the market crashed. My annual dividend income has been increasing by several $100s per month for the last several months. Here's another way of looking at that growth. This is my dividends from last month, which was May of 2020. I was earning $10,589 for the year, which was $882.42 per month. I broke it down even further though. That's $29 per day, $1.21 per hour, and 2 cents of every minute of every day of the year. That's pretty awesome. I also wanted to see how much I would be earning if these dividends were a salary for a full-time 40-hour per week job. If I was being paid that $10,589 per year as a full-time job, I would be paid $40.73 per day, which is just over $5 per hour. My first minimum wage job was at the age of 16 working at an ice cream shop. I was paid $6.75 per hour. I have a goal to get my dividends to that level and earn the same amount I used to, except without ever working again. Now look at that growth to June. That $5.09 per work hour jumped to $5.24 per hour, and I went from 8 cents per minute to 9. That's so cool to see, and it's very motivating. Another way of looking at that is I just gave myself a 15-cent per hour raise in only 1 month of dividend investing. When I earned $6.75 per hour at the ice cream shop, my boss gave me a 10-cent raise after an entire year of work. Now I can give myself 15-cent raises every month, and I don't even have to work. My dividends in June of 2020 are 132.63% more than my dividends in June of 2019, which were 580% more than my dividends in June of 2018. That rapid growth is the beauty of compounding returns and dividend growth. What dividends did I receive this month? Let me show you. This calendar is taken from the app DivTracker and shows you all the dividends I received this month and will receive on the 30th. In this screenshot from my brokerage account, you can see the dividend payments I received just in the last 10 days. $22 here, $37 here, $222, $41, $22, $122, $20, $15, and $10. To have a constant stream of income without working every few days is amazing. Here's another view of my dividends. I have been tracking monthly dividends since the beginning of this portfolio, as you can see in this zoomed out view. Zooming into this year, you can see the dividend amounts I received for June. The top 3 in reddish are those that are yet to be paid, but will be paid on June 30th, so I have not actually received them yet when I made this video. Look also at gain. You can see it is usually around $48 in dividends per month, but this month I got over $111. The reason for this is they paid a special dividend this month. Gain is a great monthly payer, but it also has special dividends, which are basically bonus dividends, so I got paid 2 dividends from Gain in June. This month, I just barely missed receiving $1,000 in dividends, but I will be hitting $1,000 consistently soon. So what's in my portfolio? Check out this heat map from Div Tracker. It shows all the stocks I own in my dividend portfolio. It also shows the current dividend yield in the center. In the top of each stock, it shows how much each company is paying me every year. At the top of the page, we have companies like Geo, which pays me $1,200 per year, Energy Transfer, which pays me $2,212 per year, and Prudential, which pays me over $1,000 per year. While some of the yields may seem high, which is often associated with low growth, my portfolio still has a good degree of growth, as you can see in this 5-year compound annual growth rate map from Div Tracker. 21% of my stocks in my portfolio have growth rates over 20%. 39% have double-digit growth rates, 61% have a growth rate of at least 6% per year, and 75% have a growth rate of at least 4%. That means even if I didn't add any more money to my portfolio, I didn't even reinvest dividends at this point, my portfolio would continue to grow every single year and provide me more and more dividends because my companies that I invest in continue to raise their dividends every single year. Here we are looking at my diversification across sector. The first chart is showing how much money I have invested in each sector, and the second is the percent I receive in dividends from each sector. The financial sector is my largest, and energy is in second because they were hit the hardest in the most recent crisis. As a result, this is where I added to my portfolio. These areas have begun to recover, which further boosted those two areas. Healthcare is the third largest, and real estate is fourth. Real estate was previously my largest because when I began this portfolio, real estate had just taken a hit and it was a great opportunity to buy. As you can see, technology is very low. I have not added a great deal here because most tech companies do not pay dividends, and most of my tech stocks are in my growth portfolio instead. This is only my dividend portfolio. Consumer staples and utilities are extremely small, and I would love to grow them, but both sectors have been fairly overvalued throughout the time I've been building this portfolio. I'm hoping for an opportunity in the future to add there when the markets shift. My materials sector is small and is likely to remain there given the cyclicality of the sector and my general disinterest for most stocks there. When you look at my dividends by sector, the disparities between sectors are even more pronounced. This is because sectors like tech have very low yields, whereas sectors like energy and financials have larger dividend yields. We are now looking at diversification across individual stocks by allocation and dividends. Bear in mind that this is only my dividend growth portfolio. I have an even larger S&P 500 index fund portfolio and a growth portfolio, so the percent of my total portfolio for each of these stocks is even less than what you see here. While Prudential, AbbVie, and Energy Transfer are shown to be 10% each. Given my other portfolios, they're actually closer to around 4% each. I generally would like to see my stocks at no more than around 10% of this portfolio, but if there is a great opportunity, I will continue to add. I got requests in my last portfolio video to show how much money was invested in each of these positions, so I'm showing it here. My biggest holdings are $13,500 of AbbVie, $13,400 of Energy Transfer, and $13,962 of Prudential. I have some very small holdings like Home Depot at $245 and Verizon at $588. I'm waiting for a better price to add in case you're wondering why those positions are so small. As you can see, my total dividend growth portfolio is about $141,000 right now. Given how volatile the markets have been lately, it's very likely that these numbers will be at least a few percentage points different by the time you're watching this video. Which 5 stocks did I buy? I bought $2,000 of Bristol Myers Squibb, $2,000 of Energy Transfer, $2,000 of Prudential, and $2,000 of Geo. I have videos on Prudential and Energy Transfer already if you want to better understand why I bought them. As a very quick single facet to show why I am buying these 4, however, look at the charts on fast graphs. If share price returns to normal valuation ratios, we could be seeing 35% growth for Bristol Myers, 34% for Energy Transfer, 69% for Geo, and 36% for Prudential. My 5th stock I bought was a small position in Hyliion, which I also have a video explaining. I bought $500 to start, but plan to add over time. I also have Ares Capital Corporation, Main Street Capital Corporation, and Gladstone Investment Corporation set to automatically reinvest dividends in my Roth IRA. So I have additional shares of all 3 this month, but they are fairly small given the amounts paid were only $123, $58, and $112 respectively. That only adds a few shares, but with the power of compounding, every single share and every single cent we invest adds up over time. The longer we invest and allow it to compound, the bigger it becomes. Looking at this chart here, the blue is the first year's dividends for my portfolio. The red is the second year, and the green is the third year so far. The reason I show you this is I want you to see how small my dividends were the first year. I received nothing in January, only $4 in February, $27 in March, and only $15 in April. My point being that anyone can grow a dividend growth portfolio like this. Starting with a small amount is perfectly fine. The most important thing is that you get started and consistently add to it. It will grow faster than you expect, and once you begin to see those gains, it's extremely rewarding and it becomes easier and easier. I also encourage you to track your dividends like I have so you can get a stronger sense of how your portfolio is performing. Thank you for watching this video. I hope this video has given you some ideas and provides some motivation to build a dividend growth portfolio for rapidly growing passive income. Remember, I am not a financial advisor and this video is purely for entertainment. If you liked the video, please hit the like button. It means a lot to me. Make sure to subscribe and hit the bell because I'm creating new videos for you every week. Also, if you're interested in getting that free $99 Div Tracker subscription, don't forget to comment on this video. As always, good luck with your investing.